quote by Will Rogers. He said, "A person that dies without adequate life insurance should have to come back and see the mess they created." You know, a lot of the time the person that makes the decision on whether they should get life insurance or not is the person that's going to be dead when the rest are left to deal with the mess. And so a lot of times they say, well, I don't want to spend money on this, or I don't want to do that, or what do I need to pay for that? Well, it's not about them. It's about the people that they leave behind. And so because of that thought process, which is faulty thinking, in my opinion, is the statistics are what the statistics are. 58 million Americans say they need more life insurance, but then the question is, what are they doing about it? 30% of U.S. households have no life insurance, period. I mean, you think about that. If I'm at work and I'm sitting in my cubicle farm next to a whole bunch of other people, that 1 out of every 3 has no life insurance at all. And that's a challenge, right? And then 80%, and probably one of the biggest reasons why people don't, is 80% of people overestimate the cost of life insurance by 3 times. That means if somebody's 40 years old and they're asked how much would a $500,000 policy cost on you, they would estimate that it would be $100 to $120, where it's going to be somewhere in the range of 30 to 40. And when you're thinking about that and you're looking at your family and your kids and your expenses and your mortgage, and you're thinking that to properly protect your family is going to cost as much as your car insurance, $100, $120, $130, and that's the reason you're not doing it, where in reality it's 30 to 40, obviously adding a $100 expense is a little bit more challenging than adding a $30 expense. And sometimes it just needs to be put in the right perspective. But here's the concept of food for thought. How much does somebody, the average person, pay for car insurance? In Utah, we're a little privileged in that we have Bear River here, that a lot of people pay $80, $90 a month, $70, where for a typical household, 2 cars, 2 drivers, easily they're in the $120 to $150 range, if they have any kind of coverage at all. Obviously, if they have liability, that's a different thing. But we're not talking about car insurance today. But the concept is comparing it to life insurance is, what does the average person pay for car insurance? Let's say it's $120 a month. What are they insuring? What is the value of the thing that they're insuring? If they're insuring 2 cars, what's the value of an average car as somebody's insuring it? $10,000, $15,000 maybe. So if they're insuring 2 cars at $10 to $15, maybe $20,000, and it's $120 a month, that's the current cost on the current value. But what does the value do of a car over time? It goes down. What does the cost of most car insurances do over time? It'll go up. And so they're insuring for $120 a month an asset that goes down in value, yet you look at life insurance and you could pay $40 a month for a $500,000 policy. Which one brings more value? And what's the value on the life of a person? Well, I guess that's up for argument.